Good morning, traders. This is Michael coming to you from GammaEdge on Friday, March 14th with our pre-market morning strategy and briefing session. As always, here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. Currently looking at our market trend model here, which continues to the downside. We continued in a bearish state across all of our indicators that we're looking at. Most notably in the top pane here, we notice the new lows still continue to outpace the new highs. So market breadth is still very weak. We need to see that change around substantially for any meaningful move to the upside. We see the filter cumulative tick with our plus 1,000, minus 1,000 filter for tick, basically institutional larger orders continues to the downside, and we did see the selling increase into the afternoon yesterday. So again, we would need to see this change around substantially and start living above the zero line. As you see, we've had multiple rounds of selling for the past week, some extreme selling actually. So institutions continue to be in a sell mode, even as we move up in overall spot price with short-term bounces. Down here, red below cyan on our colored ribbon, this is our longer-term look positioning for the overall market. So obviously that continues in a bearish state. Shorter term, our bolded white CT, that's our instantaneous CT and our intraday look that we want to watch if we're a 0DT trader or one-day trader. Continues below the moving averages with a negative slopes. So we'd want to see this improve again dramatically or quickly. You'd want to see the bolded CT start crossing above the shorter term moving averages. And then the shorter term moving averages start flipping to the upside with positive slopes. So we'll continue to watch that day over day. As you can see, really the past few weeks, any short term bounce in the overall market has been met with weak buying as the bolded CT could not get above the shorter term moving averages. And then we see a response and a quick failure back to the downside. So any bounce, we're going to be watching this with a little bit of trepidation to see if we do get that same failure. Again, you want to see strength, which means the buyers are now swamping the sellers, and you're moving back above these moving averages from lower left to upper right. And we at least need to get a close above the previous day close, which we really haven't had for multiple days or weeks, which would show that we have some stability coming back in of buying versus selling. Moving on, the SPX all expiries turned on. We are still extremely put dominated up and down the overall structure, as you can see, understanding that this is obviously what the significance of this is being read. 5,500, a very large round number. You see NGEX there. Obviously, we're above that pre-market, so we'll continue to watch that. And then we have PGEX up there at 5,560. Again, this is all expiries. We have been noting the past few days the GEX ratio continuing to either drop or now stabilize without when prices continue to go down. So we may be in an area where we could see a short-term bounce back to the upside. Just overall, looking at the option structure, as well as the GEX ratio, which is basically a put-call ratio, but we add a time component to it. So if you don't understand the GEX ratio, make sure you look it up in our education. We believe it's a very valuable tool to understand how market participants are positioning and when we may be reaching extremes in the overall market. Heading on the SPX P0DTE, multiple inlays here for your viewing pleasure. Looking at the SPX, we do not see any sort of recovery with the left-hand plane or right-hand plane. We are seeing some recovery in the SPY and Qs and DIA, so make sure you check out those individual charts. Net stat command inlay, noting where our left-hand plane, right-hand plane, these are the highest sensitivity strikes. Again, we are completely lined up there at 5,600, which we have seen that for multiple days. Yesterday and previous day when we opened, we talked about that extensively, that if there's going to be a overall weakness in the market, we're probably going to see some sort of rejection around 5,600, which provided a great opportunity to short multiple times. Heading into today, I may be a little less advantageous to short at 5,600 just with the overall sentiment and structure we're looking at. So we'll watch to see how that lines up, and we'll talk through that in our thesis here in just a minute. So again, outlining the DEX-GEX transitions, the white box, obviously, and then our blue box, and then our drunken sailor range, which you can read about in our education. But notable that 5,500 round level to the downside, where we continue to see some sort of bounce the past few days. And to the upside, we need to at least cross above transitions, which would be 5,535, 5,540, which we may be opening around 5,580 today. And then where Paul has indicated the 55.65 was projected open at 40 points. So a move to the upside would not be an uncharacteristic back up towards that 5,600. And then we have a huge confluence of transition levels, top of the drunken sailor range up there at 56.15 to 56.25. So this where I may anticipate some sort of stalling early on in the day, and where I'll be watching. If we do get above these levels, then we do have the opportunity to move to the upside a little bit. I would anticipate that this would induce some fear in these in-the-money put holders above us, and then we might see some sort of monetization event. And then obviously we want to be watching the vol-m command throughout the day to see if we have positive slopes on the put and call centroids. If we do have positive slopes, then that's indicating that market speculators are possibly positioning for upside movement for today. So those inlays, we'll jump over to our thesis and game plan for today. If you're not familiar with TradingView, you can insert this new table. It's a new feature, and then you can insert all your commentary. So I've inserted my commentary for today and my if-thens, and this is how I'll be playing for today. I've outlined the 0DT DEX transition, the 0DT GEX transition in TradingView, and the drunken sailor range. So you really see that confluence up here at 56.20, 56.25 area of the transitions and top of drunken sailor range. So if-thens would be if we come from below, which we're going to open right around 55.75, 55.80 at the moment. Do note that COTMC for all expiries is right here. This is where out of the money calls go in the money, and a possibility an area where we do see some monetization of calls. So this could be some sort of weakness into this area, and then possible retrace down towards the in-trans at 55.50. So my thesis for today is watching COTMC at the open to see if we see some sort of weakness and pull back down here. If we do get up, if we do price appreciates into these confluence levels here, I'll be watching for reactions. If we do have a reaction here, this is an opportunity to short, possible move back down towards 55.80 and back down towards 55.50. If we get above the DS and 0DT DEX transitions, then we have the opportunity to move higher. So I'd be looking for a long from 56.20 up towards 56.50 area, 56.40, somewhere around in there. We'll be talking about that. You could take an early long at 56.10, top of DS, which I discussed. It may be a little choppy unless we see a significant dealer adjustment bar and push through that area. So for me, that would be a smaller size. That would be an earlier entry. I want to be definite if we move through. Again, so we've talked about the failure. To the downside, I would be looking for the 0DT GEX transition as well as the bottom of the DEX transition. Any pullback into this area with a positive looking call centroid or put centroid may be an opportunity to get long. So that would be a early starting position for a long for a move back up towards the middle of this range. Again, note that we are within the overall drunken sailor range. This is going to be extremely choppy, extremely difficult to trade. I would encourage everybody to size down. If you're not comfortable with it, maybe just not trade within the DS. Take our definitive entries, which would be above DS or failure at DS, and then an entry down here, which would be a long at 0DT GEX transition, or a possible failure at this area for a move down towards the bottom of DS. And then obviously the bottom of DS, round number 5,500. I'd anticipate us probably not to go down below that today, just with the overall structure, but we'll look at that throughout the day to see if that changes with the vol-m, vol-d command. Again, below 5,500, all bets are off. We could have some sort of move down towards 54.80 and then down towards 54.60. I'm not really anticipating that today with where we're at with the gap up and then the overall structure and market. So let's do kind of if the 1, 2, 3 here. Staying above transition, extremely important for the day. Watching the top of transition in drunken sailor for a reaction, which would be a failure or a move above, and then understanding we're within the overall drunken sailor range. It's going to be very choppy, and you should be sizing down and managing risk, and these will be butt in the seat trades. So with that, I'll leave everybody today. Make sure you're doing your SPX game plan this morning and posting it, or at least having some sort of mechanical game plan ready to execute. Check out the SPX game plan that Paul's posted, and we'll be posting our single stock discussion stuff this morning. So everybody have a great day, make it a great Friday, and we'll see you in the Discord in just a few minutes. Thanks.